Gold is trading up more than 14% year to date. Shares currently trading, as you can see, they're at $1,473 an ounce. It's a drop from earlier this year, but some investors are optimistic it will climb to $1,600 in 2020. George Milling-Stanley joins us now. He's the head of gold strategy at State Street Global Advisors. Why will we get that high, do you think?
That's not my prediction, Adam. I really don't know. I'm kind of pleased with the way that gold has pulled back a little bit to fill in some of the gaps that the price left when it leapt in the summertime. It rose very, very strongly in June and July, up $200 above where the 6-year trading range had been. What we're doing now is we've pulled back. We're filling in those gaps. I think that's healthy. I don't know where the price is going to go next year, but my guess is it's building a good foundation toward the end of 2019 for a decent performance in 2020. I could see another maybe a $50 gain, maybe a $100 gain, but I'm not going to make that a firm prediction. I just think we're consolidating a little here, and that's healthy.
I mean, has been interesting this year that even as there has been risk on in terms of people buying equities, the gold hill still has caught a bid, even though it's pulled back recently. How unusual is it for stocks and gold to go up at the same time?
It's not out of the question. You know, these days, the relationship between gold and stocks has been changing ever since the great financial crisis of 2008-9. What we've seen is that when stocks go up, gold can go up, down, or sideways. It's done all three at different points in the cycle. But every time equities have turned down, gold has gone up. That's the relationship to watch, because that's what people with portfolios want. They want that protection.
So what would be the core thesis for an investor to have gold in the portfolio looking out over the medium and long term? Is it an inflation hedge? Is it a hedge against global economic risk? Is it trades inverse we've seen to headlines with regards to China trade?
Well, and how has that changed after time, if I can, if I can piggyback on what Jason's saying?
Great layer.
So first of all, Jason, all of the above and a hell of a lot more. It's so many different things. People always want what's the one answer about what drives gold prices. Yes, it's a very good inflation hedge. We don't have a lot of inflation right now, so there's very little evidence of that. But if we do get inflation, then you'll see that it operates well as a hedge. That's what history proves. But it is also offering some protection against the unexpected in general, whether that's, you know, macroeconomic or whether it's geopolitical. That's one of the reasons why gold has done pretty well this year, because in spite of equities continuing to go up against all the odds after a decade of rising equity markets, you've also seen that people are nervous. They're nervous politically, they're nervous macroeconomically.
Well, you're in town for the 15th anniversary of the launch of Gold Shares ETF. It's up over 200% since it began trading. You call it the king of gold ETFs. Why is it the king?
We were the first to market. I think that is a serious advantage. We beat the competition by about 6 weeks, and that was a really useful thing to do. But more importantly, GLD has developed an enormous liquidity in the 15 years of its existence. That means it's got a very narrow trading spread. It trades about a penny wide, and it has done through all of the fluctuations in financial markets, 2008, fluctuations in the gold market in 2011. It's a very, very deep and liquid market. GLD's averaging more than $1.7 billion a day in trading. That's 1% of the total trade in the gold market, so we're small, but it's important nevertheless, and it gets a lot of publicity. I think there's really, plus of course, I guess the other thing, GLD's the only gold ETF that's built up a substantial options market. Trading in the options is sometimes even larger than in the underlying, which I think is actually a healthy sign. So that's a useful thing to have too.
All right, George Milling-Stanley, head of gold strategy at State Street Global Advisors. Good to have you here.
Thank you, Adam.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.